All right, guys, on my way to work here and thought I'd make a quick video for you all. Thank you for tuning in on this beautiful Friday. The week is halfway over for me. I get off Saturday night, and then it is time to do something fun. You know, you got to have a little bit of fun on your days off. But what we're talking about today is AI. And I want to specifically talk about artificial intelligence because, in my personal opinion, this AI hype bubble that we're seeing right now is just beginning. And I think what's going to happen, and I could be totally wrong, and I've been wrong in the past, and you should always do your own research, your own risk tolerance, your own investing goals, whatever it is you're trying to achieve, make sure you're looking into it yourself because this stuff is risky. Now, Anthropic, I think, just reached about 170 billion. Let me repeat that, $170 billion for its artificial intelligence, for its AI, for its cloud computing stuff. Let's just call it. So now I've used a tool that has actually helped me build a web application using artificial intelligence. And so I'm not sitting here saying that AI is totally useless and that you're never going to achieve anything with artificial intelligence and that all these companies are wasting hundreds of billions of dollars investing in AI. That being said, I think we have to be careful when we're starting to get into the multi-trillions, potentially for even just a few companies that are relatively new. I mean, this is not Apple. This is not a dominant market presence with huge logistical operations across the US like Amazon or Google or anything like that, cloud computing data centers. Yes, I mean, they're in the infrastructure building phase, but they are not anywhere near, in my opinion. I don't care how fast you can say you can work with AI. It takes years, decades to build these infrastructures for this type of technology, and it is still so new. And what we're hearing on the ground floor, and one thing that I think Jeff Bezos is famous for saying is that when the anecdotes and the actual, let's just say the executive level or the metrics, when they're looking at the metrics, when those things don't line up, typically the anecdotes are going to win. And I always kind of thought about that for a bit. I never could understand it at first, but then getting to think about it, it makes sense now. Because if you have ground floor operations that are telling you, and in this case, the ground floor, like when I'm on a supervisor, let's just say at a warehouse or a production setting, I'm speaking to the people above me who are telling me how to do things, but it may not be the best way based upon, what I'm experiencing and what is best for the team ultimately, right? So, but in this case, the customer, and the customer itself is the subscriber, the person who's using it. It could be a company, it could be, ChatGPT subscription for $20. And what we're hearing, and let me know what you guys think in the comments down below, but it seems as though the AI is getting worse. It seems as though the artificial intelligence has not lived up to the hype, not raised the bar, as they say, not lived up to what individuals are saying, and that there's all kinds of bugs, and that once the bugs happen, it's difficult to get out of these loops where the AI just goes off the rails, and that basically the AI will, and maybe these things will be corrected. Maybe these hallucinations and all these things will be corrected. But what do you guys think? How is AI performing, and how was it initially versus now? Are we kind of losing the luster, and are we seeing diminishing returns from artificial intelligence? Because personally, that's what I'm seeing. And that's my opinion. I think we're seeing diminishing returns, and I think we're going to continue to see diminishing returns from AI. That being said, and that's in terms of stock price as well. I mean, Anthropic is already at $170 billion valuation. So if you have a company like that, or OpenAI, I think is what, a ridiculous 300 billion or something crazy. So those types of valuations, I mean, first of all, the early investors are benefiting tremendously, so they want to get out. And that gets into the question of, like, how long can this actually keep going? And I think it can keep going, and I've said this in previous videos, for a lot longer than people think. And I think we can actually see a multi-year bull run in the stock market that hasn't even hit small caps yet, that hasn't even hit mid caps, that hasn't even hit the companies that are smaller, let's just say less than $10 billion in valuation. So if you're looking at this from what type of large runners could we see, or what type of large potential opportunities we could see where we have small caps or mid caps that are doing very well. The indexes themselves you can purchase, or you can purchase the NASDAQ, tech companies. There's a variety of ways to get invested in these types of things. But I think that we're just in the beginning of this AI hype cycle. That's my personal opinion. And I say that because there's so much money being invested that there would be a lot of people who would lose a lot of money, and a lot of very wealthy people who have a lot of influence do not want to see this bubble pop. Because if they see the bubble pop, what's going to end up happening is they're ultimately going to lose a lot of money. And nobody wants that, right? If you've invested $100 million and you're a billionaire and you want to get a return on your investment, maybe you've invested $500 million into AI, into Anthropic, and you're like, well, I got to get a return here. I need to make money. So I better push the valuation up. I better get the narrative out that AI is revolutionary, even if it's not the absolute best solution for everything. And I think that's the big mistake we're making. And I'm definitely no tech expert. I mean, I've built a couple websites, a couple apps, and I've used AI now, and I've built with WordPress in the past and front end, JavaScript and HTML and all that. But I'm no tech expert. That's definitely for sure. And when it comes to the tech market, it gets very complex. But it seems as though these companies are just targeting these massive valuations. And the reason for that, obviously, is because they want to get a return on the money that they've already put so much in. There's a lot of wealthy people who are already invested into these companies that just cannot afford to lose. And so they're going to keep on pushing these valuations up. And there's going to be more positive news. Now, as always, what goes up must come down. There will come a day of reckoning. But when that happens is anybody's guess. And especially with the Federal Reserve lowering interest rates soon, this type of behavior can continue on a lot longer than people think. And so the irrational exuberance, as Alan Greenspan said in the 90s, can keep on happening. And so there's really no stopping it at this point, in my personal opinion, especially with higher liquidity coming. You do have Bitcoin still continuing to do well. I've always said Bitcoin can reach 250,000 by the end of the year or early next year, perhaps. And maybe I'm wrong on that, but I think it's still above 100,000. Am I wrong? And so, I always said it's going to hit 100,000. Here it is. And I'm not the only one, obviously. There's been so many people who've been predicting this for years. But meanwhile, you've had the naysayers kind of sitting on the sidelines. That's the thing about this. You have to be willing to take the risk. And that's what I talk about on this channel, because this stuff is not for everybody. And, a lot of people get very emotional, very passionate. They'll start taking sides, oh, I'm an investor, you're not, therefore you're not as good as me or whatever. It gets kind of ridiculous. But that being said, there is a lot of opportunity now, especially with all this artificial intelligence and AI hype that is out there, and that's going to continue in the stock market as well. So one of the stocks I've talked about on the channel, for example, is AI related, and it's also smart city and Internet of Things and all the things that you would think of in terms of the 2020s and 2030s and what people are targeting for investment purposes. And so that's kind of one of the reasons I invested in this stock. The other reason is because I do have a high risk tolerance, and this is a stock that would be for somebody with a high risk tolerance. And you can check out my channel and watch my other videos if you're interested in learning about that specific stock and what I think about it. But I do want to thank you all for tuning into this video. And it's been a beautiful morning here. It is a beautiful morning in St. Louis, Missouri. The arch is out there in the distance. Let me see if I can show you real quick as I pull up to the stop sign here. There's the warehouse I work at, and we are going to go take a drive down the lane here and get, I guess, badged in. So anyway, guys, thank you so much for tuning in, and we will see you all in the next video. Take care.